As of January 11th, 2024, 280 days have passed since the approval of the spot ETF, during which 366,000 Bitcoins have been purchased, totaling approximately $24.6 billion. Why doesn't BlackRock's Larry Fink stop? BlackRock's plan starts now. Hello, this is Bichelin. Recently, despite various geopolitical risks like the Bitcoin war, along with indicators such as CPI, PPI, and employment constantly harassing us, Bitcoin has shown resilience and continues its dignified stance. Today, we will closely analyze the puzzle that BlackRock's Larry Fink is piecing together through Bitcoin. It's quite an interesting topic, so let's dive right in. Let's start the video. Recently, BlackRock Asset Management announced its performance for the third quarter of 2024. 2024 total revenue equals approximately $8 billion. Following $1.7 billion in the first quarter and $1.9 billion in the second quarter, BlackRock achieved $2.1 billion in the third quarter. If the fourth quarter closes at a similar level, the total for the year is expected to reach around $8 billion, which translates to about $7.3 billion USD. You might think, wait, they have that much money and that's all they can earn? When you consider that Samsung Electronics, which operates numerous production lines around the world and competes for the top 2 spots in the global semiconductor market, recorded a net profit of approximately $7.2 billion in June 2024, it becomes clear that BlackRock's $7.3 billion in revenue is certainly not a small amount. In comparison to banking groups like JP Morgan, banks generate revenue through various business models, such as loans, savings, deposits, credit cards, funds, and insurance, as we all know. What's even more surprising lies in BlackRock's revenue model. In comparison to banking groups like JP Morgan, banks generate revenue through various business models, such as loans, savings, deposits, credit cards, funds, and insurance, as we all know. It's astonishing that BlackRock generates profits comparable to a giant like Samsung Electronics, with such a simple revenue model. What's even more remarkable is that BlackRock is primarily a passive fund-focused asset management company among asset managers. Funds, unlike active funds, where fund managers actively buy and sell stocks or bonds, taking on risks to achieve high returns, passive funds follow the market trends, minimizing risk, and instead of frequent trading, they focus on well-diversified assets to support stable investments. To put it simply, active funds aim to generate high returns through short-term trades, while passive funds focus on swing or long-term investments. Therefore, compared to active funds, passive funds involve less frequent and active intervention from fund managers, which results in relatively lower management fees. Among the different types of asset management companies, BlackRock operates in one of the least profitable models, yet the amount it has earned this year is truly remarkable. The fact that BlackRock was able to generate such significant profits despite its small fee structure indicates that many clients trust the company's advanced risk management capabilities and have invested large sums of money accordingly. In fact, since 2005, BlackRock has never once incurred a negative loss on its clients' assets. BlackRock has demonstrated an incredible ability to generate profits, even during global crises such as the 2008 Lehman Brothers collapse and the 2020 COVID-19 pandemic. It's likely that these unbelievable achievements are the driving force behind the company's ability to attract over $7.5 trillion USD in global assets. Larry Fink, who founded BlackRock in 1988 and has led it ever since, made a statement during the recent 2024 Q3 earnings announcement. He said, "Bitcoin is in itself a distinct asset class," adding that market acceptance and liquidity, rather than regulatory changes, will drive market expansion. BlackRock's core business isn't Bitcoin, so why did Larry Fink make such a statement, especially on the day of BlackRock's earnings announcement, when the eyes of all global investors who have entrusted BlackRock with $12 trillion were fixed on his every word? Why did Larry Fink, on such an important day, talk about a positive outlook on Bitcoin? Surely he must have had a clear intention. So, I looked into it. As mentioned earlier, during the 2024 Q3 earnings announcement, when $12 trillion in global assets were watching closely, did Larry Fink mention Bitcoin to intentionally drive its price up? I don't believe that's the case. With $12 trillion in assets under management, it's fair to say that this company holds the future of the planet in its hands. It's hard to imagine that the chairman of such a company would go on air and casually shout, "Bitcoin to the moon," in a reckless manner. I believe that BlackRock has a different vision in mind. The reason can be seen in Larry Fink's recent actions. Going back to last month, on September 17th, local time, there was this issue. Some of you may have seen the article stating that BlackRock, Microsoft, U.S. private equity firm GIP, and the UAE announced a global partnership for an AI energy infrastructure fund. This might seem like just another headline, but when you dig deeper into the details, the interpretation changes. First, the AI energy infrastructure fund is key here. A fund is just a fund, so what exactly is an infrastructure fund? If you look closely at the structure of this newly formed partnerships infrastructure fund, you'll notice it's somewhat different from traditional funds. Traditional AI funds collect money and then invest in AI companies. However, this newly formed AI infrastructure fund works the other way around. They first gather the money and then look for companies to invest in. The target companies are those involved in AI energy infrastructure. In other words, they plan to use the money they've gathered to grow companies that can lead energy infrastructure projects. Exactly. For those who are familiar, this structure resembles that of a private equity fund. It goes beyond just investing in AI companies. It signifies an intention to nurture and build the AI infrastructure from the ground up. It's like saying they're not just sponsoring a professional soccer team, but instead they've gathered a ton of money and are determined to nurture talent from youth leagues all the way up. It shows they're seriously committed. BlackRock's strong determination can also be seen in other areas. Among the companies that recently formed a partnership, one of them is GIP, the second largest company globally in energy infrastructure funds. And this GIP was already acquired by BlackRock back in January under the leadership of Larry Fink. It seems that Larry Fink is determined to fully dive into the AI infrastructure fund and make a big move this time. Recently, Larry Fink also touched on this same topic in a letter he sent to shareholders. Here's a portion of the letter Larry Fink sent to shareholders in 2024. The demand for new infrastructure dollars is far outpacing the public supply, as record levels of government debt are leaving fewer public dollars for crucial public projects. We see an unprecedented opportunity for private capital to help fill this funding gap. In my nearly 50 years in finance, I've never seen more demand for energy infrastructure, and the capital markets can help countries meet their energy goals, including decarbonization and energy security, in a fair, affordable way. That's the story. Larry Fink sees the development of industries through AI and the energy infrastructure connected to these industries as the driving force that will fuel BlackRock's growth for the next 100 years. Clues supporting this idea are emerging from various places. You might be thinking, why the heck are we suddenly talking about AI when we were discussing Bitcoin? So what's the point? It's now crystal clear that BlackRock is fully committed to investing in AI infrastructure, right? But what did I mention at the beginning of the video? I said that BlackRock is an asset management company that safely invests institutional funds through asset diversification. This is part of BlackRock's annual report that I painstakingly dug up. As of December 31st, 2022, retail investors accounted for 10% of long-term investment funds. Yes, as of the end of 2022, nearly 90% of the funds entrusted to BlackRock come from large clients such as institutions, governments, and corporations, not from individual investors like us. For these institutions, governments, and corporations, managing vast amounts of capital, diversifying assets to spread risk is extremely important. Diversifying assets? Investing a bit in Samsung Electronics, a bit in eMart, a bit in SK Telecom, and a bit in POSCO, that's not true asset diversification. If an economic depression or recession hits and everything collapses at once, that's not diversification at all. For asset diversification to truly have meaning, the assets must be unrelated to each other under any type of risk. Unrelated to any risk? That sounds familiar, doesn't it?
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though.
Larry Fink has mentioned this in a previous interview on air. Yes, that's right. Larry Fink chose Bitcoin from the perspective of asset diversification. Risk hedging? Isn't there gold for that? No. Think of it like a seesaw. Place AI and Bitcoin on opposite ends of the seesaw. When one side dips, the other rises. No matter which way it tilts, you're never caught in risk. Doesn't that sound like a dream? BlackRock is creating a portfolio that they can control, regardless of any crisis. The total supply of Bitcoin is capped at 21 million. As of now, about 19.7 million have been mined. While there's not much Bitcoin left to be mined, major mining companies are growing even larger by acquiring struggling mining firms. And the data processing energy used by these mining facilities is being repurposed for the AI industry. In the US, the largest Bitcoin mining companies by market rank are Marathon Holdings, where the largest shareholder owns 14.6%, Riot Platforms, where the second largest shareholder owns 7%, Coinbase, the custodian for US Bitcoin spot ETFs Visa, Solana's stablecoin payment partner Michael Saylor's MicroStrategy, Circle, the issuer of USDC, and the BitDAO fund behind it. And even Ethereum, I believe, Larry Fink of BlackRock, is moving toward creating a portfolio that is resilient in any situation through AI and cryptocurrencies, aiming for absolute control. The charts showing the net inflow of US Bitcoin spot ETFs, which we encounter countless times, are often misunderstood. Even many Bitcoin YouTubers, including those with tens of thousands of subscribers, seem to believe that BlackRock and Fidelity themselves are buying directly, but that's not the case, is it? These charts represent how much customers have bought or sold the ETF products offered by companies like BlackRock, Fidelity, and ARK through their respective platforms. The chart here isn't showing Cathie Wood buying with a snap or Larry Fink making purchases at will, causing the price to rise. For those who might be misunderstanding, that's not how it works. However, the business strategies of the managing institutions could be reflected. They can recommend buying or selling to their asset management clients. On BlackRock's ETF charts, there's a constant net inflow almost every day. What did I mention earlier? Nearly 90% of BlackRock's clients are institutions, governments, and corporations. It's clear that these institutional and corporate-level investors are being recommended Bitcoin as part of asset diversification, and they are actually moving forward with such investments. AI company investments, AI infrastructure energy investments, Bitcoin mining companies, Bitcoin ETF management, Bitcoin exchanges, Bitcoin investment companies, AI company investments. This is BlackRock's perfect web of a food chain. Larry Fink has placed everything on the line for the future industries through AI and Bitcoin. We may not be able to say that Bitcoin will skyrocket because of BlackRock, but we can certainly say that Bitcoin will not disappear because of BlackRock. It seems like all the pieces of the puzzle have come together. To summarize, BlackRock has chosen AI infrastructure as the theme for its future, and selected Bitcoin as the opposite hedging asset. Nearly 90% of BlackRock's clients are institutions, governments, and corporations. All of these institutions that have entrusted their assets to BlackRock are aligned with BlackRock's vision. BlackRock is trying to dominate the entire ecosystem by integrating AI infrastructure and Bitcoin as two key assets. We don't know if this will lead to a massive rally, but at the very least, their presence ensures that Bitcoin won't face extinction in the future. Thank you for watching today's video, and I'll see you again in the chat before the next video. Thank you.